You know, coming up to Washington, D.C. as a small business owner myself and never having a political position besides this one, I have found it very disturbing how when I sit in these meetings, the answer always seems to be more government regulation, more government involvement, or rolling out the government checkbook in order to help people all over this country. When as a small business owner myself, in the past, I saw the answer was often looking at my own business and seeing what I could do for efficiency, how I could help my customers and my consumers. And Ms. Nagy, you mentioned Florida. Now I'm from Texas. So Florida and Texas have a unique kinship. Mm-hmm. And how California has had stricter regulations when it's come to price increases for insurance versus California and Florida. And the first thing that comes to mind is the company that I worked with had to, just because something happens in California and they regulate more, does not mean that the prices go away or the increases go away. Instead, that price is actually distributed to all those other people to absorb the decisions that states like California make. So during a time of historic inflation, we just heard we just heard how the president of the Association for the Builders Association said that nearly a quarter of average sales for new family homes have been due to some of this increasing regulation, this ESG policy. In addition, add on to that inflation, historic inflation under the Biden administration. Could you please share with me how we might be able to look at, instead of having more regulations, ways that we could cut regulations and reduce costs that would ultimately be handed down to the consumer to be able to purchase more homes, to get more insurance?
Well, thank you. Thank you, Congresswoman De La Cruz. I think, when thinking about the state-to-state differences, sometimes it is hard to make comparisons because Florida has had a lot of hurricanes in recent years, and Texas and California haven't. I think, though, if I was going to choose where I would rather be a consumer of insurance, I would pick California. In California, the insurance premiums are significantly lower. For a home worth $500,000, an average ratepayer in California is paying $1,822. Compared to $629.
And I'm going to interrupt you right there. You're comparing apples and oranges. We just talked about insurance is based on risk. In the state of Florida, you have hurricanes, just like South Texas, yes, where I'm from. There's also high wind risk as well that you do not have in California. Mm-hmm. So it's unfair to compare the cost because the cost of insurance is based on the amount of risk. So you don't have hurricanes. You don't have the same wind elements that you have in South Texas or in Florida. So I think it's unfair to compare those two when you're talking about apples and oranges. We saw in the state of Texas, NFIP was just recently here asking for more money because they're going broke. They took flood insurance away from insurance companies like my own and made it a government program. And guess what? We were asked to waive their debt because they are absorbing, and when I say they, I'm talking about the American taxpayer is absorbing the cost of these government subsidies. So I have real concern about further government regulation and the cost ultimately